Do have a relatively good probability of filling our gap. There's a 73% probability of filling the gap over the last 180 days. That's the best day to anticipate a gap fill. But when we're more than 30 points away from the previous day's 4 o'clock close, historically, we've only filled 33% of our gap fills. So whenever we have a probability that is less than 50 inside of price, which is one of the situations here today, then there's still a very high probability for a half gap fill. You'll see here 84% probability for a half gap fill over the last 180 days, 74% probability for a half gap fill over the last 90 days. And so on days like this, we have an expectation. There's an edge leading to the half, but there's not an edge leading to the full. Now, it doesn't mean that the full gap fill can't fill. It just means that there's not an edge leading us towards it. And so where would the half gap fill be if we opened up right here, right now? Of course, I'm simulating this here, but it would be right around the 48. And all I'm doing here is I'm taking the 4 o'clock close and I'm drawing to the current price trading, making a case that if it was now 9:30, that the 9:30 opening bell would give the half gap fill at 48.25. So where are we from that 48.25? Well, we're up at 69 as our high up here. And so having an 84% probability of filling that half gap fill, that's an edge. That is an edge. So it's going to be interesting to see if we fill that half gap fill. Now, the next question that we're asking is is there anybody not in the webinar? I'm showing us still being up here. Doc lost it. Doc, are you back? Excuse me, guys. Just want to make sure. Okay. Thank you. Okay, thank you very much. Let's keep going here. I'm going to do some backtracking now because inside of the leading indicators, where are we on the dollar? The dollar is making its pullback. We're falling back down into support. And what does that do to the indices? Because of this negative 0.89 negative correlation, the indices are going to be very buoyant. They're going to squeeze. There's room for them to squeeze in the intraday time frame as the dollar is making this pullback, and it has quite a lot of room actually to continue to weaken here as we're going into our morning. The really interesting moment for our markets will be as we get into this pullback again on the dollar, and as the euro squeezes back up into its resistance. What will that dollar strength trade turn into? We're a little bit of, thinking a little bit too far out in the future, though, right now to anticipate that. We're just kind of thinking about what that might turn into later on as we go on into the week. We're going to see where bank opens up inside of that extension versus its 50% short from highs. And then there's the VIX, which really does look like it's inside of ranges here. And we're just looking at the last, 4 days? We've essentially been pinned straight sideways. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.